Guys, it's time to trade April 24th, 2019. It's an awesome Wednesday. 13 market moves daily analysis. Guys, tons of trades. This is the moment we have been waiting for, so let's rock. Here's some notes from April 23rd. Some key observations. The big money continues to flow into tech stocks on slightly lower volume than what we'd like to see in order for this move to be highly sustainable. The semiconductor stocks, however, are finally taking a pause. Number two, what we've observed yesterday is continuing. So the topping trend actually continues. Most stocks that are moving higher are hesitant to move higher on the second day. So we're not seeing the follow through that we'd like to observe. And at some point yesterday, banking stocks were actually all in the red big time. So they're finally hitting some levels of resistance, which tells us that the move higher may not be as drastic as everyone is expecting right now. So stocks that drop continue to drop on second day. We had some recent trades, for example, in LII, which dropped, and the second day it went down again. So we continue to see the story that stocks that do go down on the first day after announcing earnings subsequently fall the second day, which gets you guys a very easy swing trade. The trades for today, the exciting part: iRobot, Caterpillar, Boeing, DPZ, Domino's, and ANTM, and actually some other ones. So let's get going here. Current market environment highly resembles that environment of December 2017 and January 2018, guys. And everything was just positive. There was just nothing bad going on. The markets just couldn't see straight. Everybody was excited. Everybody was saying, hey, Dow 30,000. Dow 40,000. I mean, there was some crazy commentary going. And of course, at that time, we actually had some pretty good reason for it, because that's exactly the point when Trump announced the tax cuts. So this time around, these tax cuts are sort of seeing some of the latter part of the impact. And pretty soon, the impact of the tax cuts are not going to be visible in the economy. So really don't have a strong reason to be railing right now, besides the fact that all institutional investors, they don't worry about a thing. The interest rates are not moving up. They're happy with that, and they got to put their money to work somewhere, so they keep buying some stuff. But there's clearly, based on the charts, we're seeing that some institutional investors are being very, very cautious. This third time around, we're hitting this triple top formation. So for those of you that might have not participated in the markets, I'm actually going to record a special video making some really detailed comparison between December 17th and January 2018. So for those of you that were not trading at that time, I'll show you some very, very cool specifics. But for the purpose of this video, we're trying to keep it brief. So this is some of the things we're noticing right now. So yesterday we had this big white candle higher. This big white candle can actually be compared in S&P 500 to this white candle right here, which was in March. And look what happens right after this big white candle. We had two consecutive candles lower. Here's another candle that this one could be compared to, is one right here, and two big candles lower after that. Now, it does not necessarily mean that all of a sudden we're going to get a big red candle, but I think, observing some other signs, it is reasonable to expect that we're not just going to drastically move higher here, especially if Thursday night Amazon initially pops and starts selling off. Guys, this move right here is not going to be sustainable in the markets. So we got to be very, very cautious. Same thing we're observing in NASDAQ. Same big white candle right here. It resembles identically this candle right here. And look what we got right after that. 2-day drops. Same thing right here. 2-day drops. Same thing right here. 2-day drops. So overall, it's a nice, beautiful uptrend. However, nice, beautiful uptrends don't last. So when I'm making a parallel to the December 2017 and January 2018, this is how this story looked. Guys, it wasn't that long ago, and everybody was a bull right here. Now, this is what happened next, right? This is where everybody was a bull, and this is where some funds that were betting actually against the VIX, they were shorted VIX. Some big funds actually closed down completely. That's been in business for years, 30 years, 40 years. These funds got taken out completely by this move in the S&P because it was so unexpected. Everybody in here as the markets in 2017 have some of the lowest VIX environments ever, between 9 and 12. Okay, finally, all this time that they kept betting against the VIX moving higher, when this thing happened here, oh boy, it was a total nightmare. So a lot of people went out of business when this happened. So we should be taking this triple top very seriously, guys, because this move lower, as complacent as things are simming right now, this is not the time to be jumping in and buying calls. Now, we will buy calls if Amazon actually sustains the move higher and we're seeing some strong volume. If we're seeing Amazon moving higher and low volume, guys, this is not the time to buy the market, even though that's what everybody's telling you to do right now. So we continue with some easy strategies of shorting the tops. And if some of you maybe wonder, well, Leonardo, you keep saying how 80% plus of the stocks that announce earnings, they keep going higher. So why don't we just buy the damn calls? I mean, why do we have to make things so complicated? Can you just make things easy for us? Let's just buy some calls. It looks like the market's moving higher. All the stocks announcing earnings, they move higher. Guys, there's one big issue with this, right? When you buy calls before earnings, you're going to pay a substantially high premium. And what we've seen a lot of stocks when they're stalling, okay, the best case scenario, you're going to break even. So, for example, if you're expecting a certain stock that trades like $150 to go to 160 after announcing earnings, and let's say it does go to 160, well, the day before you were paying a substantially higher price for the option that you were buying. So even if the stock does go to 160, in best case scenario, your option is going to be worth exactly what you paid for it. The only way you would be making money if instead of 160, that stock ends up rocketing to 175, 170, 180. In other words, that move needs to be substantial. The move needs to be the kind of move what they call in Wall Street a surprise. In other words, it's a much larger move than what the options traders are expecting. And it's kind of easy to see what option traders are expecting. If you pull up any option chain, it's going to show you specifically, okay, what levels are the heaviest volumes in option chain are taking place as far as what strike prices, okay? And so that's how you can determine by what size of the move the market is really trying to calculate here. So the only way you make money in the directional trades buying options right before earnings is specifically when, you know, you calculate a move that the general consensus does not expect and ends up being a much larger move. Okay, so basically we're using a strategy. We're waiting until the earnings are announced to put on the trade, guys, and this is really the most profitable way to do it. Now, unfortunately, the only obstacle we had this earnings season so far is when stocks pop, when they do make a pullback. These pullbacks have been rather insignificant in a lot of stocks. They've been to the magnitude of maybe $3, $4, $5, and sometimes, depending on what you're paying for the option and when exactly you get into the trade, they may not be producing some crazy gains, but they're coming. And here's some cool trades that we are considering today. So if you guys been waiting on the sidelines, trading small positions, as what we've been discussing in the last few weeks of these videos, okay, this is the time to increase your positions and take some serious trades, guys, because there's going to be some tremendous opportunities. So trade one that we're considering is iRobot, okay, and this one is down. So based on our observation, if something drops down the first day after earnings and the initial reaction is down, just remember like ISRG, okay, what do? You guys should know by now that the proper action to take, okay, is not just to buy necessarily puts right at the open. What you want to do is a slight pullback higher. So maybe if it runs back to this level like 116, 118, right, buy a put option right here in the expectation of what? Guys, it's very simple. Remember, first target is going to be 109.80. So maybe if you get in the position right here at 118, it will visit this level of 109, 110 at some point during the regular session. And so basically you target this level 118 to get in, you target this level 110 to get out. $8 drop, guys, when this thing moves higher, you're able to buy these put options at a significantly decreased premium. So by the time it make that $8 move, this could equate to like 150, 200% return, okay, depending how well you're able to nail this top on the bounce. Okay, so pay very close attention. This is a very cool trade, and here's why. If you've studied the courses, right, especially if you guys went through the Trade Like a Rockstar course, there's a lot of details that are being given in the course to specifically focus on the historical daily trading ranges of stocks when you're trying to calculate some of these moves that happen after earnings. Well, iRobot is an awesome stock for trading options, directional options, because look at the history of the stock. Look how huge this moves. Like this stock literally dropped from a level of 95 to a level of 55. Look at what time frame. Look how huge this move. Percentage-wise, it's like 45% drop in like 2 days. Are you kidding me? How often do you see stocks do that? But what's cool about it is it's also able to do this consecutively on many occasions. Look, here's a drop from 115 all the way to 80. Here's a drop from 105 all the way to 275. Here's a rise from 85 all the way to 130. Okay, so what we're seeing is once this stock gets going in one direction, which in this particular case, in the case of iRobot, the direction now is down, it is likely to continue the move down. All you got to do is get in on the right side of the trade, which would be on the put side in this case, when the stock bounces. Well, most of the traders, when they look at the screen and they see something move higher, of course, sometimes you start questioning yourself. Oh, geez, looks like this thing is reversing. Oh, my goodness. Man, I'm glad I didn't buy the put. Okay, while you're going for these stocks, this is exactly when you should be pulling the trigger and you should be getting in. So, you know, based on the history, once this stock begins to drop, it's likely to continue the drop. I mean, the chart shows you multiple examples of this. And just because it's down pre-market, I mean, there's another objection. You're probably thinking to yourself, well, Leonardo, this thing is already down $18. Who cares? If you look at the history of this stock, it's been down $45 here, 30 here, 30 here. I mean, we're talking within a very short time frame moving in the same distance. So the fact that it's down 18, that's fine. It can move down 30 by tomorrow altogether. So in other words, we have another $12 move here in the stock. But what's even better, if you do catch it in a bounce, let's say it goes to 118, then you're really catching, instead of this $12 move lower from 112, let's say, to the 100 level, you're catching it from 118 all the way to 100. But again, so buy a couple of puts. This is not the time to buy singles and manage your position to where, let's say you're getting in at 118, you close out your first position at 110 on one put, and then you hold on to the other put in the expectation of the further drop based on the history of the chart, and you close out the other put, let's say, when it gets to the 110. Okay, next trade. Next trade we're considering, guys, is Caterpillar. Now, I love Caterpillar because it actually has a very high probability of a reversal, guys. So if the chart shows you that historically the chart loves to reverse, then this makes your case for shorting the top so much stronger. So let's take a look at this chart right here. So far pre-market, guys, as I'm recording this, this is what the stock is doing at 145 down to 142. So let's see where we could be heading here. This is the high probability reversal type stock historical. Here's what we see on the chart, right? So boom, it flies after earnings. What happens next, guys? It reverses. Here's a powerful black candle right here. Drop, drop, drop. Here's a reversal candle right here. Drop, drop after earnings. Here's a powerful move higher, gap up higher, followed by a what, guys? The move lower, a gap down the next day. It looks like we have another formation, just looks like that. So look at this. Look how precise this chart is on Caterpillar. We're at 145 level. This is where the bearish formation was formed when? 3 days ago. So where we at? This morning pre-market, 145.78. It coincides with this candle right here. So you want to short this thing at 145. So that's what we're saying. Buy the 145 puts, 140 puts, because the probability is going to go above 145. It's just not very good, guys. There's probably a 10% probability it's going to move above 145. I wouldn't even give it a 10% probability, to be honest with you. Maybe 5% is going to move above 145. Got 95% chance it's going to move below that and likely to close under 140. Now, why 140? We're likely to hit this level of 135 to 133, guys. This is an easy trade. Just do it. Take action. Let's make some money. Now, considering also Boeing 385, 390 puts. Now, we've stayed out of this Boeing mess for quite some time, but this is actually a good area to come in. Yesterday we had some good earnings from Lockheed Martin. Somebody asked me a question, is Boeing going to take all of the other defense stocks down? I don't think that's the case. but Bowen can take itself down today on this powerful reversal move, and here's why. So the ideal short time to short this thing would be if it hits 394. As we're looking at, it's kind of working its way up to that level. So you may want to wait till it actually hits this level right here, 1, 2, 3, which would coincide for this 393 to 395 area right here. This is a good place to short it because at this point, this gap low that was created a month and a half ago, that would still not be closed. The probability is going to close this gap is not going to be very high. So this would be a great entry right here. Now, we may not get to that point. Okay, we're trading at 381 right now. It's moving higher. I mean, initial reaction was lower, but it moves higher to like 380, 394 briefly. I think the reversal could come in. This is not my favorite trade, guys, but it's definitely something to be paying attention to. If we get to this level, this would be a good time to pull the trigger. Now, Domino's Pizza, we're considering 285, 290 puts. Okay, the stock is up. This is another stock that actually, after earnings, has a high probability of reversion on the second and the third day. So this looks very interesting, particularly that we're observing this level. Look at these dots I got here, guys. Let's have some fun. Okay, so here's top 1, top 2, top 3. This bearish reversal candles form another top. If you really consider this looks crazy. A lot of people are going to say, dude, it's a double bottom kind of, but to me, it looks more like a head and shoulders. And you're going to be thinking, Leonardo, everything looks like a head and shoulders to you, man. Come on, man. You're a permanent bear. Guys, you know that is not true. I've made some very, very good bullish calls in the past, particularly recently at 4 months ago, predicting this huge rally, which just now seems to just never run out of juice. Come on, rally. We're ready for you to run out of juice here. So let's do this. We're ready for you, Domino's Pizza. We think if you get to this 285 level, it would coincide with this stop right here. This would be a great time to get in and short this because this was preceded by many reversal candles. So I think we're about to see another reversal candle. We're getting terribly close to this level of 290, 295. The stock is definitely not going to be able to break above that, no matter how strong this market is right now. So, and guess where we are pre-market? 285, 286. Love this level because the probability of moving higher from here is just not going to be sustainable for the stock. So we're up from 270 from yesterday all the way to this 285 level. Love this level, 285, 286, especially if it moves to 290, 295. I'm in. I'm getting in. So I'm going to start accumulating position at 285, 286. If that's where we're going to open at 9:30, I'm going to add more at 290, 295. I think the reversal will follow in the next 72 hours. Considering ANTM. Now, guys, healthcare, remember, we've talked about it a few days ago. Last week, we had a very good trade on Humana, UNH, top correlation trade. So basically, we said the next healthcare stock that's going to pop on earnings, what are we going to do? We're going to come in and we're going to short it because this appears to be a high probability trade in this environment with the healthcare stock. So, but I'm not sure if we're going to be able to squeeze this trade, guys. And I'll show you why. I love the trade, though. So it's already been up pre-market to a high of 264. Now it's down at 251.50 at the time I'm recording this. So I'm not sure exactly where this thing is going to open up. Like it could bounce back to 258, and that's the case. I want to short it. But it could be opening maybe by the time we open it, let's say 244. So the problem with this is this. It looks like ANTM can revisit this level of 230. So if we open it like 240 or something, I mean, there may not just be too much meat left on the bone here, guys, is all I'm saying, because, we should not be expecting this stock to be dropping below 230 because we had some strong bullish reversal candles right here in this thing. So, you got to be careful. Just depending on where, if it opens at 250, yeah, I want to buy puts. But people were coming in, as you can see by accumulation distribution rate, they're coming in, and at this 230 level, this is kind of a dangerous situation to stay, bearish on this thing because it appears to be this could be the temporary bottom in the stock. So if you're taking a trade in this one, then, let's say it opens at 250, wait for a reversal to come in maybe to this 230, 235 level and just cut it right there. Don't expect this thing to go below 230. Okay. And here's a BIIB trade. For the same reason, we're most likely to avoid this trade because of strong support around 220, 228. This stock tried to bounce and drop. As you can see, we're having a lot of these stocks, guys, that are bouncing initial in earnings, that are reversing right there, right now, pre-market. Okay, and so this is a behavior that we have not been observing the first week of earnings. And so far, I mean, this is a bit of a change in the behavior that we're seeing today pre-market. Here's why we think that BIB may not be dropping below this 220 after this huge sell-off on huge volume. The buyers were actually stopped the stock at about 220 right here, and we had a huge white candle right here falling through on this move from 220 back to above 230. So I think the stock is going to struggle. So we're not, after a huge move like this, guys, generally speaking, after the stock makes a 30% down move, don't expect another 30% down move in the near term. It does not mean it cannot happen. In certain stocks it will, but probability is very low. So just stay out of this. I mean, regardless of this bearish reversal candle, can it drop? Of course. I mean, we can see this thing back to 220, but to, continuously think and be bearish on this thing, saying, oh, it's going to drop to 180 or 200, I think after this huge drop and the recency of the drop may be a little bit unreasonable. So do we have some downside? Yes, but honestly, probably take some other trades. Market move. One yesterday, okay, just a straight up bull, guys, okay, can't confuse it with nothing else. Market opens high, continues high for the rest of the day. It's a 1. This is how it looks on the chart right here. 2-day sequence is 4-1. So 4 is a bullish reversal move, followed by 1, which is another reversal move. Now this is how it looks on the chart. This is your 4. Then the next day the market opens higher, moves higher, and maintains higher through the end of the day. Now, the 5-day sequence is 62741. I think there's a high probability of a move 6 today, which is basically going to confirm the top information. This is how things look right now on the 5-day sequence. Here's your combination right here of 62741. 62741. It looks like we're hitting the top, a top, and another top yesterday. Let's see if we're going to continue hitting the tops around these levels today. If we're not able to break through these levels right at the gate, if we're not able to break through these levels by 11 o'clock, I think we're going to easily turn around and hit this level of 2920. Which not many people expect. There's just so many bulls out there. I mean, they're killing the bears right now, but not for long, because they were killing the bears in December 2017 and January 2018. And if you study the chart, what happened next. So a review on the VIX real quick. It's low numerically, still going kind of sideways, but despite huge rally in the stocks, I think Camilo pointed out correctly, good job Camilo, is he noticed, look, the market is moving up substantially, but it seems like the VIX was in the green for just a brief moment intraday, and the market was in the green, so it was a little bit of a divergence going on. But I think it was a great observation, because when the market moves up substantially like that on such a green day where pretty much 99% of the stocks are up, VIX should be definitely dropping below 12. But not only does it not do that, it opens at 12.47, hits a low of 12.08, and then finishes pretty much close to the highs of the day at 12.33, just under this 12.47 where it opened. Okay, and this is how it looks, right? So it hits a high, drops to a low, but then finishes high, and looks like pre-market action, it gaps up higher again. We know a lot of these gap up higher in the VIX have not been sustainable, but it looks like, maybe the bottom is somewhere near here, because it should have really dropped below this 12 level yesterday. So the next market move is 6. In other words, after such a substantial move yesterday, I don't think there's going to be enough fire in the market to be making another substantial move higher like that today. Now, of course, if institutional investors are going to keep pushing stocks like Amazon and Netflix higher, which, by the way, Netflix did hit a pretty strong resistance level yesterday, right, at about that 380, 385 range. So I think there may be a struggle there, but it does not mean we should just go ahead and short it. So, guys, stay away from shorting some of these stocks right now until the moment is going to be right. So 6, 11, 1, the probabilities for the day. Okay, with that said, guys, let's have an awesome trading day. Get ready to trade. This is the time to trade. This is the time to take quick action. Make these decisions, guys. Have a plan. I've revealed some really awesome trades for you. Just take advantage of them and make some money today. Let's go. I'll see you guys tomorrow.